Development is what you see and what you get.
The whole growth process should be supported by the quality of the human beings in terms of their functionality. Right. You can have high incomes, but with low quality individuals, it doesn't serve the society well.
Right. So all you need is a piece of land. The sun is God.
Like a whiteboard.
Okay.
Right.
The sun is God given.
Right.
And you will not get that funding from the banks.
Right.
So we have 100 years of banking in Zambia.
Right.
But you cannot get from a bank,
right.
Long-term money.
Right.
Then beyond that, do we see the inequality in terms of income inequality reducing so that the poverty levels are reduced? You can imagine a country over 60 years of independence having about 60% of the population living in poverty.
Capital markets must own the economy.
So the capital market specialist, right?
That's just my view. The reality is that capital markets must own the economy.
Have you heard of the hell run? Hell as in hell.
Yeah.
You've never heard of the hell run? Okay.
Wizard is too young to know about the hell run.
The hell run.
Hi. Welcome to the Zambian Development Podcast. My name is Wiza. I'll let my co-host introduce himself.
Hi, welcome to the Zambian Development Podcast. My name is Kachingwe Singoi.
Okay, so I'm going to introduce my first guest and accept my sympathy if you've never heard of him before. To my immediate left, Mr. Mate. He's a finance expert with a lot of years of experience that we actually don't need to say the number because, it's too big at a certain point. We're happy to simply say he has a lot of years of experience. But we can say for sure that Mr. Mate has been working at a very high level for the last 30 years, right? Now, when I say high level, I mean 30 years ago, he was the first general manager for the Lusaka Securities Exchange. And this wasn't, again, by appointment. It wasn't nepotism or anything like that. He saw an advert, applied, did interviews, and got the post. And that's not the only first we can talk about. He's achieved a bunch of firsts, and not just in finance. And I guess we can say, for example, that Mr. Mate was the first process engineer at the Nkana acid plants, right? I don't know if he knew that I knew that, but here we are. That was with ZCCM, Zambia Consolidated Copper Mines. Obviously, at this point, we've actually learned that Mr. Mate is actually a chemical engineer, right? So if we threw in like a sombrero, we already have the glasses with our Walter White from Breaking Bad. Obviously, he went on to get an MBA in finance from North America. We could also talk about his presidential appointment as executive director at the second iteration, or I don't know how many iterations of the Industrial Development Corporation. And I guess all I'm trying to say here is there is many positive things you can say about managers that would be in a meeting, but organically always preface good comments with "I'm the dummy in the room," right? That's Mr. Mate's thing. So he would be the smartest guy in the room, the most experienced in the room, but every time he wants to say something, it'll be like, I'm the dummy here. And then he asks a question that nobody actually understands, like really, so that's, and I got a chance to experience Mr. Mate when I was with the Industrial Development Corporation. But anyway, we could go on and on about Mr. Mate. But right now, we could say he's a founder and an executive at the Stockbrokers Zambia. He's also a director, a non-executive director representing members at the Lusaka Securities Exchange. Remember that Lusaka Stock Exchange, like Lusaka Securities Exchange, that he worked as project manager for founding it and became the first general manager. So, Mr. Mate, we're really glad to have you on this podcast.
It's a pleasure. Thank you, Wiza.
Thank you so much. Then my next guest, an absolute pleasure to speak with Dr. Dale today. Dr. Dale He's a senior lecturer and researcher at the University of Zambia, for which in the Department of Economics, for which he served over extended periods as head of department. And he's been teaching in that department since 2004. So for those that may have actually failed his mathematics for economics, that's 21 years of lecturing and teaching, lecturing and researching economics. And so we could say again a bunch of different things about Dr. Dale, having taught for 2 decades from the department in the Department of Economics. Now, when we actually say that, we could either consider that an indictment, or we could call it an accolade, right? But we'll figure that out. He holds a PhD in economics from the University of Cape Town, a master's from Chancellor College in Malawi, and a bachelor's from the University of Zambia. And among other extracurriculars, is associate director for economics and development at the Southern African Institute for Policy and Research. This is along with other fellowships. He's published very widely on trade, poverty, and industrialization. We could talk about the whole list of things that's on Google Scholar, and we're going to publish his Google Scholar page on our platforms. Recently, he published a paper in the Oxford Handbook on the Zambian economy, which was looking at trade policy in Zambia, and we can get into that. So this paper says something very interesting. So the paper characterizes Zambia's trade policy and considers its impact on growth, export composition, and destinations. Now, it makes this one interesting conclusion. So it shows that Zambia successfully reformed its trade policy from an inward-looking to an export and outward-oriented economy anchored on unilateral, bilateral, regional, and multilateral trade preference schemes. That's a mouthful, but what the interesting bit is successfully, and we're very interested in hearing how successful that actually played out. Obviously, I've passed through the Department of Economics with Dr. Dale, and it's an absolute delight of a lecturer to have, and very innovative too. Without wasting too much of your time, I'll give you one bit that showed me. I've never spoken to Dr. Dale about this. In the final class of one of our graduate courses, Dr. Dale walked in with an innovative idea. I don't think it was required by the university or the department or anything like that. I think he wanted to perform an evaluation of the course, and it needed to be anonymous, right? So he starts making this statement to the class. But I think it was so new for everybody that somebody raised up their hand and basically started to give the evaluation of the course in public, right? So then at that moment, it was like, dude, no, you shouldn't do that yet. You're contaminating the sample. So that's an instance of Dr. Dale, I think, personally, being innovative in how he pursues his lecturing. And all of that, I guess, is to say that a lot of us over the last 20 years have passed through your hands, and we remember this, right? And it shaped how we gone on to become or not become economists. As you can see, I have like funny hair now, so we could talk about his indictment in that indictment later. So again, Dr. Dale, thank you very much to have you here.
It's my pleasure being here. Thank you.
Absolutely. Okay, so we can actually go into our conversations today, which are going to focus on trade, finance, within the context of Zambia, not trade finance, but trade and finance. And then let's say how they interact. And I'll let my co-host proceed with the questions.
Once again, thanks for honoring us with your presence, Dr. Mudenda and Mr. Mate. So I'll go ahead and ask the question. What would you say is development? Because we've been exposed to a definition of development by laymen that don't give us a technical definition of really what is development. So I don't know who's going to pick it up first. Maybe I should start with Dr. Mudenda. I'll pick on you, Dr. Mudenda. What would you say is development from a trade point of view? And later on, I think Mr. Mate will pick it up and just explain to us really what is development from the financial point of view.
Well, quite a very tricky question, because as you may imagine, development has been defined differently by different people. And so I'll just try to walk you through how this concept of development has evolved over years, or indeed from one author to another. But overall, you can look at it as, transformation of the economy by building capacity into it to grow and become, improve the welfare of the people that reside in that particular economy. And if you bring in the trade aspect, not only the domestic economy, but having positive influence also in other economies. Although that definition looks like it has some implications on how economic growth to mean development, it doesn't really comprehensively cover what development is, because of the various components that it should have. In the first place, definitely, there should be economic growth. And this economic growth should be building towards, being able to improve the people's capacities and abilities to actually undertake activities and also be able to contribute to the economy itself. In which case, development must be holistic. It should include the growth or increase in GDP and the capacity for GDP to improve over time, over a sustained long period of time. And also the people's incomes must be increasing. Now, this increment in people's incomes should not be just on the average, like what you call GDP per capita, but this GDP per capita should be also well distributed among the people that live in that particular society. You can have an economy that is growing, an economy that seemingly is doing very well, but it does not actually imply that everybody else is doing well. So for you to do well, the economy should be growing, and this growth in the economy should be inclusive by ensuring that people are also having access to the endowment in terms of the resources that are generated by the economy. And beyond that, we could look at the improvement in welfare should be accompanied by the building of the functional capacities of the citizens that are in that particular economy. What do you mean by the functional capacities? People should be able to, be given capacity and abilities to work, to generate income, to live a life that is actually good, in which case you are reducing inequalities, as well as trying to ensure that every person's welfare is improved in the given society. For the World Bank, for example, they have looked at development by basically saying, okay, there should be reduction in inequality, but over and above, they have classified countries in terms of how they are developed based on the threshold of income per capita. They'll tell you that if you are below 1,300, you are a low-income country. You are above 1,500, you go to lower middle-income country. You go to about $3,500 per capita. You've grown to a high-income country. Overall, they're using income per capita as a basis upon which they can classify the country's development. And the whole lot of the process then will speak to income levels must be good, but these income levels should also be somehow be well distributed. And then it also waters down the aspect of simply saying that overall GDP should be able to define what your level of development is. It does not. It should be also be looking at how much it is well distributed and how the population is actually getting capacitated in the whole process. If I were to give a very simple example, you may have a country like China whose GDP is maybe the second in the world, but it's not taken as a developed country. They still look at it as an emerging country, mainly because if you take the population to the income, it still gives you thresholds that look like are slightly lower, but the economy's capacity is good. So generally, development must be one that increases people income in the national output, and possibly associated with the structural transformation, that is moving from less valued products in terms of output to high quality products, and possibly structural transformation should be taking place in the economy in the sense that, the kind of output should be one that sustains the economy for long-term growth. And also the institutions themselves must be becoming robust to support the growth processes that is taking place. And the whole growth process should be supported by the quality of the human beings in terms of their functionality. You can have high incomes, but with low quality individuals, it doesn't serve the society well. So all those dimensions and also various technical definitions will embed some of these particular elements. But one of the easiest that I would want to say maybe should take interest is one by Amartya Sen, who looks at capabilities approach to development. You should be able to, one, capacitate the people, improve their incomes, but also make them functionally able to undertake activities in the economy. Don't just make them functionally capable, but also give them the opportunities to undertake tasks given the skills that you have given them. So it can be mouthful, but the technical definition depends on who is trying to define it. Thank you.
There we have it. I'll go ahead with Mr. Mate. Mr. Mate, development.
Yeah, thanks.
What is developed from the financial point of view?
Yeah, thanks, Kachingwe. And also just to acknowledge the broad definition given by Dale. And Dale spoke like a true economist, as he should. I'm going to speak more from an engineering, perhaps, point of view. And look at it really in the context, if you like, of the Zambia situation. So we often hear people say Zambia in 1964 at independence, we had the same gross domestic product as South Korea. And so then fast forward, where are we and where is South Korea? So I like to sort of perhaps look at it from the perspective that says development is what you see and what you get. And from that perspective, I would focus on three things, and elements of which Dale has alluded to. One is infrastructure. What infrastructure do you have to support your environment, to support your economy? Two, what are the social amenities that are available for the people? And here you're looking at your schools, your hospitals, your transport systems. And then three, do you have the capacity to manage that environment and those systems? And so here you're obviously referring to human capacity. And if you look at it from that perspective, and if you look at it from the Zambian experience, then you realize, for example, that from a developmental point of view, Zambia emerges in 1964, and we don't have infrastructure. Our infrastructure is very limited. We only have that one rail line, and we have an urban center called the Copper Belt. But everywhere else, there's hardly anything. Two, we don't even have a university. Three, we don't have the human skills to manage that economy. So you look at the number of university graduates, we're probably, very few. I think the common understanding is that we had less than 100 university graduates. So those are my three sort of approaches to development. What's your infrastructure base? Two, what's your social amenity base, for want of a better word? Three, do you have the capacity? Do you have the human skills to manage that environment? And from that perspective, you then see that the challenge for Zambia is one that says, how do we move from this base and climb up the ladder? And you then come to the reality that you need finance. Okay? You come to the reality that says we need finance for development. And so now you see Zambia struggling with the issue of how do we put in place the infrastructure? Okay, how do we put in place the required social amenities? And of course, how do we get the Zambians skilled up? And at that point in time, it becomes really a struggle for funding that development or funding economic development and subsequent growth.
Right. All right. So I think it's a lot to consume, but very clearly elaborated, I think. So let's try and get into what that actually looks like, right? So we have a clear sense of what development is, or the bigger pieces, or at least the main pieces that we need around it, in terms of finance, and then trade and manufacturing. Now, the question would be something like, after all the literature that we have in economics, on trade, on finance, all the governments, let's say, that we've had, one would probably say, well, we should have figured out how this works, right? If we're talking about trade and we argue that trade contributes to GDP, chances are somewhere in the many volumes of publications, it tells us how to do that, right? Mm-hmm. So in the Zambian case, and this is true, I think, for finance as well, right? What would you say are the blocks? What are the bottlenecks here in translating everything we know about finance and how it's supposed to work? And mind you, we're not just looking at Zambia, right? We have many examples. So in the Zambian case, though, maybe I'll start with Mr. Mate this time. What are the main bottlenecks preventing us from using everything we know about finance and applying that to optimize our development?
Thanks, Wiza. Clearly, there are several barriers or several bottlenecks or several challenges, and you see those to this day. And the most obvious one is the one that says, ultimately, at the end of the day, the decision is really about what are your goals, what are your objectives,
right?
And how do you then fund those objectives? In other words,
Right.
What's your strategy
Right.
to actualize where you want to get to?
Right.
And that then simply boils down to what's your funding strategy? What's your financing strategy? What are your options?
Right.
And if you look at it from that sort of broader perspective, your options obviously are, domestic resource mobilization.
Okay.
What's your level of contractual savings that you've accumulated in your economy, which you can apply, which you can
Right.
deploy to support that development. And to the extent that you don't have enough of those resources, you inevitably do what governments have tended to do historically and today. They look for foreign support. They look for classically what we've all come to call aid at the end of the day. But even before you get there, you are still also trying to deal with the issue that says, how much entrepreneurial capacity is available within your country. And that then speaks to your private sector. To what extent is your private sector sufficiently strong to be able to play that active role, that significant role? And to the extent that you don't have a developed private sector, which simply means you don't have a strong entrepreneurial base, you end up with a situation where government then takes the lead, or government has no option but to play that role of driving economic growth or driving economic development. And of course, to the extent that government now steps into that role, governments too must ask itself the same question that I was alluding to. How are we going to fund it?
Right.
Okay. And to the extent that, again, your savings, domestic savings are not there, governments will then inevitably try and bring in foreign aid. But governments also do one thing, which is quite interesting. they also then try and wear the hat of being an entrepreneur. And
Right.
so they start setting up government enterprises,
Right.
which we all know classically as your state-owned enterprises.
Right.
So from that perspective, you see that government is really trying to respond to a challenge. And I suppose one could make an argument that it's a challenge which probably puts politicians in a very difficult position of agency. Okay. And agency obviously is always linked to the political calendar.
Right. Right.
So you want to do something, but you want to generate results. And so that agency is what probably then drives the need for government to say, oh, we can take over the running of the railway.
Right.
We can take over the running of, or we can set up an airline. Or we can even take over, how you make bread.
Right.
And so you now have a state-owned company that makes bread, when the private sector, strictly speaking, should be able to do that. It creates its challenges, and as a consequence, we now have this very clear path of development, such as in Zambia,
Right.
where post-independence, you see government take that lead role of accelerating development.
Right.
And of course, that has the impact of sidelining the private sector.
Okay.
And then that model then fails.
Right.
And then we now go back to privatization,
Right.
which now says, let's bring back the private sector because we believe they are better at this.
Right.
And that takes us to where we are today, where we have essentially opened up the economy on the basis that the private sector can drive economic development. But we're not quite there.
Right.
Because if your private sector has operated in an environment where for 30, 40 years they have been suppressed,
Right.
or government has always taken the lead, your private sector is always going to be sitting on the fence, okay, and not so sure whether they can step forward. And because in their minds, culturally, they still think that government must take the lead.
Right.
So that's where we are today.
Right.
We have a field where, on the one hand, there's this desire for private sector-led economy,
Right.
but the reality is that our private sector is really not sufficiently entrepreneurial yet. It's not sufficiently aggressive. It's not. One could also even argue the financial structure, the financial structure in Zambia is not developed to a point where you can actually see active private sector participation.
Right.
Because there's two challenges in terms of how you access long-term funding.
Right.
Because development requires appropriate type
Right.
of funding.
Right.
Okay,
Right.
that's the reality.
So,
And you will not get that funding from the banks.
right.
So we have 100 years of banking in Zambia,
Right.
but
Right.
you cannot get from a bank,
Right.
long-term money,
Right.
even to this date.
So can we just zero in before Dr. Deo, you come in? Can we just zero in on specifically one aspect of how we channel these domestic funds to the private sector? Whether or not they can use it is a further question. Whether they're entrepreneurial enough, and whether or not there's a bigger market. There's a big enough market to consume whatever they produce, and maybe Dr. Deo, you could speak to that. But let's talk about the Securities Exchange. Right.
Yeah.
So it celebrated 30 years, I think 2 years ago or 1 year ago. And this is something you've been very involved in. So can we talk about that? Like what's the missing piece? If you look at how many companies have listed since it started, it doesn't quite make sense, right? And we're talking from the, let's say, the backdrop of having had experience with how these things are set up. And we're also dealing with very smart people heading these organizations. So what's really missing there?
So it takes us back really to the point I was trying to develop, which was that at independence in Zambia, we were not developed. Okay,
Okay.
because that's where this
Yeah.
this conversation started. What is development? We recognized we were not developed. We recognized that we needed to accelerate economic development.
Right.
Essentially, we were saying we needed to catch up. Okay, we
Right.
needed to make a difference. And so the issue then was, how do we fund? How do we finance our development? Then I made the point that we then see government step in
Right.
and take that lead role. But what we also see, interestingly, is that in other countries, the successful countries, the model of development in terms of accessing long-term finance is through the capital market.
Right.
And the capital market here, we mean the market for long-term finance.
Right.
And so what is very clear in Zambia is that we don't have that at that point in time. There is no capital market. We've got banks, but the banks can only offer very short-term funding.
Right.
So what you then see is that, having recognized this and having walked this path, when we privatized in 1991, what emerges simultaneously in 1991, what comes out alongside the 1992 Privatization Act,
Right.
is the 1993 Securities Act.
Right.
Okay.
Yep.
And so the Securities Act is now defining the capital market.
Right.
So now there's a recognition of this intersection,
Yep.
that if we are going to create a private sector driven economy
Right.
to get development, we must have a capital market. And for us to have a capital market, we must have the regulatory framework in place,
Okay.
which is your Securities Act.
Okay.
So the Securities Act now is enacted in 1993, and really we are now at that stage now of creating the conditions for us now to develop our market in long-term finance,
Right.
so that we can mobilize
Right.
domestic savings and channel them into long-term investment. And with that, obviously, then necessitates the need to have a stock exchange. And that's how you end up with the Lusaka
Right.
Stock Exchange, starting up in 1994.
Right.
So, cut a long story short, we have come to a point where we have now tried to put in place what one would call the architecture for the financial market to support economic development. So the rudiments are there through the stock exchange, but we still have gaps.
Right.
And we can talk about those gaps. We still have challenges. We can talk about the gaps, but in a broad sense,
Right.
we have the framework. Yeah.
Okay.
Yeah. And the question I think you were leading to maybe is that framework working?
Yeah.
And how do we improve it? But I think that's something we can come into later.
Sure.
I'm
Sure.
sure Dale has a lot of thoughts around this as well.
Right. I'm sure you have spoken about almost everything that we've talked about, and I believe that one of the things that drives governments to decide what they decide to do,
Right.
is not only the domestic conditions, but
Okay.
rather what is happening in the peer countries or globally. So you see, for example, Zambia coming out of independence, gaining independence in 1964,
Right.
a liberal economy,
Right.
doing relatively okay because of saving a few people at that stage,
Correct.
Right.
which was, can I say this, in quotes, the white settlers,
Right.
who had the health facilities, they had
Right.
the education facilities, with the average Zambian having no access to those facilities. We could be saying that we are doing much better than South Korea, as people put it. But the question that we should be asking ourselves is, what was the state of the
Right.
people
Right.
that
Right.
were in the country at that time?
Right.
Only less than 100 graduates,
Right.
less than 1,000 grade 12 certificate
Right.
holders.
Right.
What can you do with that? So one of the main existing philosophical thinking at that time was that government or state-led development was the best way out to move countries out of poverty.
Correct.
So you find that the socialist economies in the Far East, as well as in Russia, and also in our region like Tanzania, were critical in terms of adopting those policies. And then you do not be an outlier. Even the developed countries at that time, some of them were encouraging that kind of socialism or state-led development. So we take it up and we take it up as a country. But then the geographical environment, also in terms of Zambia, started to play a big role. We have, let's say, war in our neighboring countries. You can talk about Angola is in trouble. Mozambique is in trouble. Okay, Malawi has no access to the sea. South Africa, there's a problem. Zaire, which is Congo DR at the moment, the Bengoda rail line is damaged. They can't take goods outside the country. And you want to allow import and exports to take place. How do you do that? There's no private sector which is able to do that. The state creates what they call the National Import and Exports Corporation, NIEC, which was to import almost all the products that we need in the country. So the environment which was existing, go to Russia, go to Tanzania, even Malawi, was more of a state-led development process. Then what does that mean when the state comes in? For Zambia, we remained an open, quite of like in the trade, first of all, in the Industrial Development Corporation setup. We had to set up industries to produce the goods and services. We didn't have development banks. We had the state had to create its own bank and then finance its own activities. But if you see during that process up to 1981, industrialization took root. In terms of the composition of GDP, Zambia was actually ranked among maybe the 4 countries that were doing well. Maybe Zimbabwe, then you had Cote d'Ivoire, somehow Kenya, Zambia's the manufacturing sector was transformed, accounting for over 30% of GDP, which was looking at as being quite good. From the industrial perspective, we've set up the industry, but then there comes in the big elephant in the room. How do you sustainably finance this? And this is what he has been talking about, borrowing and getting all that kind of money. So we have an economy that was functional, an economy that was then constrained by the availability of resources in terms of financing to move forth the products that we could move forth. And unfortunately, we adopted a very good policy of import substitution industrialization with an export orientation. Unfortunately, that became a trap in the sense that you want to say you want to export, but substitute the imports. That became a trap in the sense that, yes, we're able to export the copper at high cost, definitely in the initial stages because of transit routes which are closed in southern part of Zambia. We have, I don't know if you've ever heard of the Hell Run. Hell as in hell. You've never heard of the Hell Run? Okay.
Wizard is too young to know about the Hell Run.
Hell Run. It was a situation where, as a country, we got closed up. But we've got to take out the copper and all the exports and imports. For you to go to Tanzania, you have to, as a driver, you have to say bye to your family because you don't know that you come back. There's no road. So you had to create all this infrastructure, moving goods. It was quite expensive. So it was called the Hell Run. You never know whether you're coming back. So given that kind of high cost of trade within the country, it becomes, of course, quite difficult for the private sector to invest. Which meant that the state had to take over the role of the trader and the producer. And then we allowed for import restrictions. Now that had to hit us also because we needed to import inputs in the production process. That doubled and increased the cost of production in our industrial base. In which case then how could we have structured possibly our policies in a proper way? And in the initial stages, the World Bank and all the multilateral corporations were happy with that kind of industrial policy and trade regime. It was only subsequently when we started to move and the thinking started to change that liberalization was critical, which actually started way back in around 1985. 1985, I think by then you're already a manager, right? So in 1985, we go for liberalization of the economy. In fact, privatization was hot in 1987. 1988, 1989, the government decides to say, look, we're going to privatize, but take it slow to ensure that the industries do not collapse.
Right.
But we see the rushed privatization in 1991 that
They did,
actually
right.
generated what we saw
Right.
in the subsequent years and resulted in what we can call deindustrialization,
Right.
with an aim of trying to provide the private sector an opportunity to set itself up. The rest here has already explained them.
Right.
Thank you.
Kashimwe, do you have a follow-up?
Yeah, I do have a follow-up question. What then would be the objective or relative measures of Zambian development? Let me tie this question with this one to say, at what point do we admit that measured development and felt development by our people are two different things in the Zambian context?
Sorry, come again, Kachingwa. I didn't hear you.
Okay, so I'm trying to tie two questions in one.
Yes.
I'm saying, having defined development, well put to admit, what then is Zambia's objective or relative level of development? And then I'm tying this question to, at what point do we admit that measured development and felt development by our people are two different things?
Quite tricky question. I think that in terms of the evolution of Zambia's development process, like we have said, we could be, I still want to say the fact that we are measured as having been better than South Korea, the initial conditions were quite very different.
Yep.
South Korea had a huge population of educated people, which when it comes to capacity, they had human development, which was a prerequisite for economic development. Right. We didn't have that much of the human development. And as you can imagine, there was free education that was put in place. Industries were set up. But again, when you have a government intervention, you also expect government failure, isn't it?
Right.
So we ended up establishing these firms and also these companies, which in some cases overemployed.
Right.
So that the productivity is not as good. We see that in terms of inequality, it was not so bad up to 1991. So what we want to see in terms of Zambia's development is one, like he has said, do we have the infrastructure? First of all, do we have growth in output? If there's growth in output, is this growth in output facilitating, capacitating people in terms of human development, not only human development, but also giving them access to exercise their capacities in terms of jobs, in terms of being creative. We have talked about private sector businesses, being able to take up businesses and run those businesses successfully. Then beyond that, do we see the inequality in terms of income inequality reducing so that the poverty levels are reduced? You can imagine a country over 60 years of independence having about 60% of the population living in poverty. I can say that given those indicators, we may not have done very well. Structural transformation becomes critical in terms of both output, but also in terms of institutional development. He's talked about capital, which is essential. Capital in terms of road network, capital in terms of institutions like buildings and the structures that should facilitate investment as well as facilitate possibly human development itself need to be in place. Because if you don't have those, there's no way the private sector can come into being. We have seen growth, for example, in Zambia from 2002, maybe up to date. On average, we can say that has been positive, but the growth has been jobless, leaving people without jobs and so forth. So we want to see the development that does not only lead to growth in GDP, but carries the people along to give them endowments or be able to them to have access to endowments like income. We should enable them to access the goods and services that they want to have. So where are we as Zambia? Definitely in terms of the classifications, we've moved from one level to another, from low income country to a low medium income country, and back to the low income country based on the World Bank classification of GDP per capita. But our people have remained poor. Could we say that is development? It becomes a question that we should be looking at more closely to interrogate and see then where the missing link is in building capacities of the people, but also giving them the opportunity to exploit that capacity that they have so that they've gained income and we narrow out the income inequalities that we face. So it's a complex thing that we should be looking at, but it's something that many countries have overcome and have done, which Zambia itself should be able to do, as we shall be discussing going forward, possibly.
Thanks, Dale.
Before Mr. Mati comes in, I was thinking after Dr. Mudenda has really put it in context, I wanted to make it more interesting for Mr. Mati. Mr. Mati, as you answer, also bridging the fact that could it be that the capital markets tend to own our economy as we get to advance our development? Could it be the reason why it doesn't trickle down to the common man?
The capital market tends to
On the economy. So it doesn't.
Oh, okay. The capital market tends to own the economy. Is that what you said?
Exactly.
Okay. I'll try and pick that up. Yeah. But I just wanted to perhaps pick elements of what Dale made reference to. And I may not have understood your original submission, Kachingwe, so I'm just going to pick up a couple of points. I think Dale raises the issue of jobs, and he used a particularly interesting term. I think he said jobless. I think he might have even said jobless growth. And this is a phenomena that we currently sort of see, but I think this was perhaps more stark around 2012, because in the introduction, Wiza made reference to the Industrial Development Corporation, which was the original vehicle created by government sometime, one could say, end of the 60s, to spearhead this frontier role government was taking for itself to accelerate development and growth, to be specific, economic development, economic growth. And it was called Industrial Development Corporation, INDECO for short. Now, what you then see is that in 2013, we reintroduced the Industrial Development Corporation. And this time we called it IDC, as opposed to INDECO. And a lot of people were asking the question, why are we going backwards? Okay, when the old model failed. Okay, so if INDECO 1 failed, okay, why are we creating INDECO 2? Okay, and that was the big debate around 2013. And that debate was a very hot debate, a popular debate, an aggressive debate as to really, are we doing the right thing, or if anything, we are going backwards. But what you see is that INDECO 2, or IDC today, was really a response to this issue of jobless growth. Okay. Because you had a situation where we were attracting quite a lot of foreign direct investment. Okay. And our GDP number was rising. A lot of that FDI was going into the mines. And to be specific, the newer mines. But the difference between the new mines and the old mines are the new mines are highly mechanized. Okay. They are technology driven. So a smelter today is an electric smelter, and it employs 200 people. But you go back to the Nkana smelter, where I famously worked, and that would have employed 2,000 people.
Right.
Okay.
Labor
intensive. So you have a situation, therefore, where in terms of absorption, labor absorption, that is the challenge. That we are seeing good numbers on paper, 3%, 4%, 5% GDP growth, FDI is coming in, but Zambians are actually not getting jobs. Okay? And this issue of jobless growth then becomes a challenge, because when I was finishing grade 12, okay, on the day I finished, there was probably 8 job offers in front of me. Okay. 8 job offers in front of me. Okay. Excluding going to university. Just, I could get a job. Okay. On day 1 of finishing grade 12. But today, you don't have that situation. So a critical measure clearly is the issue of job creation. A critical measure is clearly the issue of what is the level of employment, and what strategies are in place to address that. The other measure is clearly empowerment. To what extent are the citizenry really driving the economy in terms of ownership of the economy itself? Okay. And therefore, the level of entrepreneurial, okay. To what extent are we dependent on foreign investors or foreign owners of our manufacturing base? Okay. That's a critical measure of development, because that has a huge impact in terms of what happens to your domestic savings going forward. That has a huge impact in terms of how much you are capacitating your citizenry. Another measure is your financial sector. To what extent is your financial sector localized? Because at the end of the day, you need finance for development. But to what extent is your financial sector actually localized? Do you have local financial institutions? And in Zambia today, we have, unfortunately, a very difficult situation where we really only have 2 banks that are local, for want of a better word. And that obviously is Zambia National Commercial Bank, ZANACO, and the Zambia Industrial Commercial Bank. Okay. Right. But if you go to other countries, in our neighboring Kenya, perhaps Zimbabwe, Nigeria, you find that they have managed to develop stronger financial institutions, banks in particular, that are localized, because that makes a big difference in terms of how you support development going forward. Where is the decision being made as to accessing that finance? Okay. Right. Is it a decision that's having to be made externally, or is it a decision that's being made here in Lusaka, because it is a local bank, and therefore the agenda, the appreciation of the issues is that much better, is that much more interesting. And this is where you see, for example, at a practical level, how we are now seeing more engagement of the likes of our domestic contractual savings institutions. Workers' compensation is busy putting up a modern hotel out in Luapula province, Samfia Beach. You see NAPSA is responding to the energy crisis by funding second line for Mamba Core so that we can deal with the energy deficit. And if you go to any of the other banks, and I'll just use that word, other banks, and you say, we are building line 2 Mamba, they won't touch it. Right. Okay? And you know why they won't touch it? Because they'll say, okay, you're going to be converting energy from coal. Right. Okay? Right. And coal is dirty energy. Okay? Right. Oh, yeah. But that forgets that today, with modern technology, what was dirty yesterday is not dirty today, because you can clean out all those emission gases to a very, very high degree, okay, and still therefore be able to generate electricity from Mambo Core and deal with this problem that we face today. But for that to happen, you need a bank that is local, okay, that understands the issues on the ground, that we need energy, okay, and that decision will be made locally. Right. Coming to your question about the local capital market owning the economy. The reality, Kachingo, is that Capital markets must own the economy.
Says the capital market specialist, right?
That's just my view. The reality is that capital markets must own the economy at some point. And that's why where you are in the US, Wall Street is so important and so powerful. And that's why government inevitably must monitor what is happening on the Dow Jones index, what's happening to the market. How is the market responding to economic policy? And so as a country generates its budgets, an annual budget or economic policy, you inevitably want to see what's the reaction of the market. Is the market swayed that this is a good thing for the capital market going forward? In other words, will companies grow? Will more jobs be created? That's really is the issue at play. Okay, if the Fed or the central bank decides to raise interest rates, the question then is, what is the impact of that going forward on the industry, on the economy? Who's the winner? Who's the loser? Okay, and so your capital market then ultimately that's where it's actually played out. And at the end of the day, that playing out is then summarized in your stock index, because the stock index simply becomes the barometer to sort of aggregate everything else that's going on in the economy, the pluses and the minuses, and you end up with a net position. Right. So that's why I submit that the capital market must inevitably, or maybe not to be so strong, the capital market does end up owning the economy. And that can't be, Dale may disagree, but that can't be a bad thing.
Yeah. Okay. Of course, you come in. So I'm also looking at our time. We made a few scheduling issues, so we're going to have to move a little bit quicker on some topics up. But Dr. Teo, you need to make a comment.
Yeah, just to say, answering your question, how far has Zambia gone? Has it made any progress? I'd say yes, we've made progress in terms of development, from both human development and as well as from in terms of overall economic development. With a lot of capital that has come in infrastructure, like I said, we only had one small this, one small that, but we still have a long way to go. I still look forward to seeing a capital market where you don't have only less than 20 companies listed, but more companies listed, with the Zambians not using it as a saving platform, but as a trading platform where money exchanges hands, and then you're all, participating and building the country to become one which is well entrenched in resources that you require to develop the country. In fact, if I were one person that had power, I would still go back to the GATS provision, that's the General Agreement on Trading Services, and possibly put domestic regulations that say a company of a certain value must be listed on the stock market, because then it enables the citizens to participate as well in the development process of the country.
Right.
Yeah. Thank you.
Kindly allow me to just pick up on the point Dale makes, if I may.
Right.
If you look at, say, Botswana has, say, 2 million people, and we are 10 times more, say 22 million Zambians. Botswana has a GDP of somewhere, say, 15, 17 billion US dollars, and we are 2 times that. But when you look at the Botswana capital market, the Botswana Stock Exchange, they have something like 42, 45 companies, okay? And we only have 19, okay? So there's something wrong there, okay? There is something fundamentally wrong there, okay? Because we are a bigger economy, we've got 10 times more people, okay? And yet our capital market, as measured by the stock exchange, is half of what Botswana is, okay? That surely tells us something in terms of the issues that we must come to terms with and correct going forward.
Okay. No, that's a good place maybe to transition, but I would like to make the comment that the Gen Z types, the guys that get excited about 6, 7 and things like that, I think they've grown up, and even partly I've grown up in in an information space that says the Wall Street is bad, Wall Street is evil, it loses people's money. So when you hear Mr. Mate, that's been involved with the stock exchange, saying the economy is actually going to be on there, I think the Gen Z people are going to be like, no, maybe he's a boomer or something like that. But to kind of like transition and hold our audience hand on Zambia's development path itself. So let's go back to something that we've spoken about, right? We spoke about privatization and state-led. Now, like Dr. Dell mentioned, we had a paradoxical outcome where ISI was import substitution industrialization was supposed to solve the problem, but it actually kind of exacerbated it, especially on the forex front, right? And it was all roses and wine until 1971 hit, and everything goes down. And another point that we need within this chronology we should note is what happens during privatization itself, right? So 91, 92. For those that are interested, you can actually go look up how the curve manufacturing as a share of GDP actually looks like. It's just at privatization, boom, it just falls, right? And then it's kind of becomes a very hard sell to say that was the solution. So what I'm positing to the both of you, and in any order, is to kind of like hash it out a little bit. Not too much time, but hash it out what your thoughts actually are on privatization versus state-led. Was it a problem of a bad transition? Or was it a problem of the policy itself? We should never have thought to transition.
Yeah, thanks, Wiza. I'll be very brief and simply say, we took a method which was more like a short, sharp shock approach.
Right.
In other words, it was almost like, let's hit it now.
Right.
So that, we don't look back.
Right.
So the impact, I think, was rather severe.
Right.
On industry,
right.
And on the economy.
Right.
Clearly, we needed to free up the economy. And unfortunately, privatization, as I say, was more of a short, sharp shock. And so we ended up really with a situation where the pain in terms of job losses, but also maybe the bigger pain perhaps was the fact that we did not give ourselves sufficient participation in the outcome.
Right.
Because at the end of the day, this issue of economic empowerment is something that really needed to have been more strongly addressed at privatization, so that we would end up with Zambians having a bigger involvement and ownership through the stock exchange. Back to my argument about the capital market. And I'll give you a very simple example, if I may. So take the case of Copperbelt Energy Corporation, CEC. CEC is listed on the Lusaka Stock Exchange. It is now the largest company in terms of market value, and is currently valued at about $1.5 billion. Okay. But when you look at its transition from being private to being public and listed, okay, and when it comes to the market and lists, it ends up empowering something of the order of 4,000 Zambians as shareholders. And it ends up, therefore, having the largest shareholder base of all the companies on the stock exchange.
Right.
So you see the degree of empowerment that it has created. Okay. But you also see that it's as if you have you've created a V8 engine, Okay.
Right.
Because all these Zambians now, all of us now are excited. We support, we back CEC. Okay.
Right.
And the company also in turn pays out dividends to its shareholders. And you've just seen the share price go through the roof. And today it's the largest company on the market. My point is that we needed to have more CECs. And we could have had more CECs
Okay.
out of privatization. And
Right.
remember, CEC itself is out of privatization, but in a much more innovative way.
Right.
Okay, so we could have seen more CECs from our brewing companies, for example, just as a simple example. Did I say brewing?
Right.
Basically, I think he has said it all.
Right.
And like I've said it, I think the 1988-89 Privatization Act
Right.
had spoken to a gradual process of privatization,
Right.
with a view of prepare a company for privatization, ensure that has good solid base, and sell it when it is still viable, so that the new owners can continue to run with it.
Right.
And unfortunately, of course, as the ideology changed both in the nation as well as in the multilateral institutions, that privatization was the in thing, we went into front load everything, that is, sell everything as it were. And that led to an adjustment problem for most of the companies that ended up closing up. So we should have been a little bit more careful to nurture some of the companies like CEC was. Possibly he's talked about the breweries. Maybe that's one of the firms that came out so good. Maybe we could have nurtured it and then sell it in a proper way, so that at the end of the day, it also empowers the people of the country. But ultimately, because we had firstly not worked on the complementary infrastructure to support the new private initiatives, the cost of production was still high in Zambia compared to the regional counterparts. I can say, for example, countries like Zimbabwe, countries like South Africa had already a strong private sector-driven economy and had already industries. So you had new industries, or in companies, for example, closing and just shifting their production to the next country.
Right.
You had Dunlop closing, you had Deliver Brothers closing, going to Kenya. You had everybody else trying to do that. And that then collapsed our manufacturing base as a country, because we had a policy position that did not nurture these companies, but also gave a conduit for ease import flows through complete liberalization of the imports from other countries. So could have possibly managed it properly to ensure that we don't collapse the whole production process and as well as the manufacturing base. Otherwise, I think perpetual government presence in business may not be a very good thing, because government failures might not be as much as we cannot really gauge as to whether government failures are better or worse than the market failures. But businesses or private individuals have more animal spirits and capacity to run business than government. You might want to know that government in the 90s owned even the retail shops.
Right.
Yeah, and all that kind of stuff. Could have given off some of those facets and remained with some of them.
And this is, I think, something that a lot of people need to realize, right? That the argument state-led versus privatization is a huge part of our economic history. If you're going to look at, I wouldn't actually consider the stock exchange maybe top 5. I would say privatization, state-led, when basically the UNIP government decided just to go full throttle on, we're going to run a command economy. And there's people that say, well, they actually did that because they wanted to show the population that we are actually economically independent. We've got this political independence. Now we actually want to run the economy ourselves. And that came with a lot of inefficiencies, right? So then they blot up all these industries and redundancies and all these stories. But then a kind of different problem happens at privatization. So it's like we are now going to basically follow what the IMF are saying. And obviously there's the story around privatization should have actually happened much earlier. It was just held up, and there's an election story for that. But what ends up happening is we are going to shock our economy into a market economy without actually setting up the infrastructure. And these are points that you both made. Now, in that framework, they did try to set up. I'm just pushing back a little bit. They did try to set up institutions that would hold shares for Zambians specifically, right? It just did not work. Now, my question to the both of you is, so let's assume all of that is water under the bridge, right? We had state-led, everything was bloated, we privatized, we realized, well, these things were running on fumes, right? And, we had to close a lot of that stuff up. So where we are now, based on the domestic resources that Zambians have, what's the best play? How much should government come back in? And how much should we go full throttle with making, and I'm making a joke here, making the stock exchange on everything?
So you are asking essentially, given where we are today,
Yes.
what's sort of the way forward?
Right.
If I
Yes.
if I hear you, well, the reality is that to your point, privatization is now behind us, and I guess it takes us to the next question, which is how do we stimulate or how do we push economic development? I think for me, it comes down to the whole issue of empowerment of the citizenry. And that then boils down to how do we create an environment in which we can see more local entrepreneurship. Okay. At the end of the day. And it takes me back to the point I made earlier that the basic framework is in place, but we still have some gaps. Okay.
Right.
And so for me, the issue is one, empowerment of the citizenry so that you and I and anyone can get into business. We can set up companies. Okay. And that means entrepreneurship.
Right.
Now, one can then make the point then that really at the end of the day, there are many of us out there who can step up and play this entrepreneurial role.
Right.
So what's missing? What's missing is the finance to support entrepreneurship.
Right.
So we are back to that whole financing problem, the financing challenge. Okay, that you must empower the citizenry, but is there the right funding or the finance for that to happen?
Right.
And I'll give you a very simple example, a practical example. So right now, we have an energy crisis.
Right.
Okay, and we are all aware of this energy crisis and what it's doing. We are also generally agreed that one fast track to this energy crisis is development of solar power. Okay.
Right.
You and I probably can talk about this from our IDC days.
Right.
Yeah. But right now, we are all saying solar.
Right.
Now, if you stand back, Wiza, and you think about it seriously, for solar, all you need is a piece of land.
Right.
Okay? Because the rest is God-given.
Right.
It's the sun. Right?
Right.
So all you need is a piece of land. The sun is God.
Like a whiteboard. Right.
The sun is God-given.
Right.
Okay. The technology, and everybody who knows the technology, you can even buy the panels out of Radiant stores.
Right.
Okay. You can buy the panels locally, but you need the funding. Okay. And so what's interesting at the moment is that of all the big solar energy projects that are currently on the table, you'd be very hard pressed to find those that are, say, 5 megawatts and above that are locally driven, that are locally owned in a significant level. Okay. So the point I'm trying to make is that Dale and I, surely we can find 5 hectares somewhere.
Right.
Okay. And what we then need is us to be able to go and knock on the doors of a financing house and say,
Right.
we want to do 5 megawatts, okay, for which we need $4 million.
Right.
And our contribution
Is the land.
is the piece of land,
Right.
okay? And we can get debt funding, for example. So the
Right.
equity position, our ownership can still be significantly high, okay?
Right.
But to what extent can you actually do that right now? Okay, you can't. Part of the reason is that there is no venture capital funding available in Zambia right now.
Right.
Okay, if you go to the banks do not provide that kind of funding
Right.
at this point in time. So those are the gaps I was trying to refer to.
Right.
That we still have gaps. So the challenge for long-term funding, to a large extent, is still there, particularly if we want to support entrepreneurship,
Right.
if we want to support the empowerment. Because I argue that solar projects, to a large extent, we should see more of those being done by locals
Right.
and creating companies that they end up on the stock exchange.
Right.
The companies, that will grow, because a solar plant will last 20 years, 20, 25 years.
Right.
And my argument is still the same, really. The only thing that's missing here is funding, finance, the
Right.
appropriate funding, finance for that.
Sure.
Yeah.
If I can just, I know Dr. Deo, if I can just cue your answer, because it does, Akachingwe, it does seem like this is the only topic we are really going to address before we go to some of the curiosity questions we have for the panel. Dr. Deo, if I can just narrow your frame a little bit. So from finance, all we need is finance. And obviously I'm playing by oversimplifying.
No, that's fine.
it.
That's fine.
So that's what we need, finance. It's a very clear gap, right?
Right, yeah.
We have the land. All we need is some guys to pay for the stuff to construct. Now, on the manufacturing bit, on the real sector side,
Right.
and on the trade, what is the gap there? How do we get this solar plant running?
Maybe before you can even talk about the solar plant itself,
Right.
he's talked about the financing itself.
Right.
In the first place, as a country, we should have a long-term plan of
Okay.
what we want to be in the next 20, 30 years. Then once we've got this plan that we want to be, if we're looking at manufacturing, are we saying we want to move from, labor-intensive manufacturing?
Right.
We talking about opening the Kafue, Texas, and so forth. Then beyond that, are we going to go into light manufacturing? We've got a lot of mines right now that are running. Are we able to say in the next 5 years, we should replace all the simple basic supplies to the mine, like bolts and nuts,
Right.
by locally made bolts and nuts?
Right.
Beyond that, are we going to say after 15 years, we should be able to manufacture the computer systems that guides the equipment that work in the mines,
Right.
locally manufactured?
Right.
If we have that kind of a trajectory and thinking, then as a state, we must be thinking about what do we exactly need in this setup. First of all, can we create the manufacturing sector that is responsive to the needs of the economy by training skills, developing skills that are required for those sectors? He's
Right.
talking, for example, about the financing in solar systems,
Right.
but also, do we have the skilled people that are willing to venture into them?
Right.
So we created those skills. And then next, we look at what resources do we have in the country as a country,
Right.
which we can use for research and development, so that we can have these products readily available. Research and development is a very expensive venture. Countries like Chile, for example, use the proceeds from copper mining, invested in research and development, and then use the products that are found to sell to the private sector, so that then the people that are local people there can invest in those products with little risk. So you de-risk the investment opportunities so that people can take them up and invest in those subsectors. So from the trade perspective, Zambia is actually dominated, of course, by copper. But if you look at the non-traditional exports, they are largely manufacturers, and these have been concentrated in chemicals, they have been concentrated in food and processing, food, processed foods, and so forth. But we can leapfrog and go to certain areas that go into light manufacturing for spare parts for the mines, spare parts for whatever, so that at the end of the day, we can be developing our industry that is going to be responsive to the needs of our country. like I said, modern mines are running on capital-based with sophisticated equipment,
Right.
but are we able to develop some of the very basic requirements by implementing what we may call the local content policy, which
Right.
then will enable the Zambian people to undertake those investments. So let's look at, do we have the skills? If not, it is the responsibility of the state somehow to also invest in those skills so that we get them. So overall, I think the whole package of our development path and the development policy must be comprehensive so that we are able to look at what are the complementary policy requirements for us to get into the next stage of our industrialization and manufacturing subsectors. So we have that kind of setup that we need to explore and move forward as a country.
Right.
Yeah. So the state may not run away from undertaking the very basic, addressing the market failures in terms of, capacitating the people and being able to put them into right positions to run those particular firms. He's talked about the entrepreneurial spirit.
Right.
That is vital. I mean, if you look at, I've talked about Chile. For the salmon industry in Chile to come up to where it is, it was Pinochet who sent actually people to Japan to go and learn. And when these guys came and said, okay, we're going to invest in salmon fish industry production, and then the government said, okay, fine, we're going to give you loans from the copper proceeds because there's a diversification strategy. So at the end of the day, it moved on to become like that. By the way, they did not just end at that. Even electricity generation, Chile plays a very big role in Latin America because of the same policy decision that was made, that we've acquired the skill, we can export this skill to other countries by establishing power plants in those states, and Chile becomes one of the largest exporters. So I think a little bit of leverage in terms of research and development, triggering people to move forward, and using the advantage of the open trade policy to take our goods across countries. Thank you.
Sure. Kachingwe, do you have a comment on
Yes,
this?
I've got a follow-up question for Mr. Mate. Mr. Mate, would you say the Zambian financial sector is designed to develop our local economy? The reason why I ask this question is, is it possible that we can raise money locally? Practical example of the case of NAPSA. The workers' money is used to invest in retail, and there's not so much emphasis on manufacturing. Would you say if there was so much awareness on how that the workers can be able to invest in the stock market for to help us raise the finance that we need for industrial development?
Thanks, Kachingwe. The reality is that our current financial structure setup is not really structured to promote or support empowerment of the local entrepreneurs or citizenry to get into active business per se. You will often hear reference to funding SMEs and such, but the practical reality is that it is not, and that's why I gave that example of participating in the energy sector, renewable energy sector, and more specifically the case of setting up a solar plant. Because this is really an opportunity that should not bring any challenges at the end of the day. Once you've put those panels, they just sit there. It's not like you're having to change any moving parts every month, or they just basically you just need to wash them, clean them, and do very low maintenance for 20-25 years. But they are generating electricity and you are being empowered. So the current setup is not. And maybe the question we should be asking is, what is missing? And I think what is missing is, and then I'll come on to your comment around NAPSA. What is missing is really financing houses that provide that sort of long-term funding. And classically, this would be your venture capital funds, where, Dr. Mudenda and I can team up and say we want to do 5 megawatts of solar, and then we go to a venture capital fund or private equity fund, but more likely venture capital fund, and we can access that funding. And they can take comfort from the fact that, we've got the land, the technology is very basic, and there's a big energy crisis. We can get a good tariff, and so on and so forth. So the financial structure, the financial architecture, we need further development. Now, we are seeing some interesting initiatives. So if you look at what British international investments have done, they have recently set up something called Growth Investment Partners. And that's coming in to provide funding to local companies. They will give you something up to about $5 million. They've got an investment model where it's not really, it can be some sort of loan, but they probably would want to give you money such that they participate in the turnover. Okay, so it's like a royalty model. So they participate in the top line, in your sales turnover. So the focus there is to make the business grow. Okay, so it forces the owners of the business to push for turnover. But it also takes away the strain companies normally have that, you go to a bank, you get a loan, the loan has got an interest rate, so you then must pay interest on the loan. And then if interest rates go up, you also feel the pinch, So this model, you can see, is a much more enabling type of model going forward. So we need to see more such innovations. And interestingly, British International Investments, which is their name today, we used to call them Commonwealth Development Corporation, CDC. They set up the first venture capital fund in Zambia way back in 1996. And that's the same venture capital fund that gave, if you like, support to successful companies that we know today, such as Hybrid Poultry here in Lusaka, which also then gave birth to Golden Lay in Luwansha. So that is one area. Even when it comes to housing, we need a new type of housing institution funding, mortgage finance housing, which is able to again provide appropriate funding so that more and more people can build houses. And then houses, as you know, is a good asset for purposes of collateral and so on. Coming on to your question around NAPSA. NAPSA actually is a very interesting entity in the sense that if you remember the history of NAPSA, NAPSA was formed on the back of the National Provident Fund. Okay. And it started operating in 2000. So as we speak, NAPSA is celebrating its 25th anniversary. And what is interesting about NAPSA is that NAPSA operates to a set of investment guidelines which have been issued in the form of a statutory instrument. And these are world-class investment guidelines. They define what it can invest, the sort of assets its asset allocation and all that. All that is world-class. And so one cannot debate that. I think what was important was for us to see it grow, okay? And I think 25 years later, we can see that it has grown, okay? And we can therefore see that it actually has punch, okay? And because it has punch, we are now seeing it play that important role of then stepping out and say, we need energy, we can put 300 megawatts out of Mamba Core, line 2, and they step up and they provide what I call the anchor funding. And now that they've played that anchor role, it should then encourage other players to come in and piggyback on what NAPSA has done. So we see NAPSA playing what I call a catalytic role going forward, which is how it should be. And that's what you see happen in other countries elsewhere, where your domestic savings, which are under contractual savings, such as NAPSA Workers' Comp, are your sources of long-term funding. Because remember, from their perspective, they've got to give you a pension, okay, when you stop working. So they've got to receive your money today and invest it and make it grow so that 40 years later or 30 years later, it has grown to give you a pension. So they've got to make those correct investment decisions. So why not fund a renewable solar energy plant, which is 25 years today? Okay,
Exactly.
because it can only do one thing. It's very low risk. It can only grow.
Right.
So for me, the good news is that we are seeing NAPSA play that important developmental role, which it should, catalytic role, which it should. And if you go to countries like Kenya, you will see their equivalent play that role. You go to South Africa, PIC, Public Investment Corporation, it plays that role. You go to, in fact, Zimbabwe is an interesting case because we know that Zimbabwe has gone through economic turmoil. But that's what we know outwardly. But what you actually find on the ground is that the economy actually has been running, it's been active, it's moving.
Right.
And what has kept it afloat in the midst of all these sanctions is your domestic savings held through contractual savings such as your NAPSA. That is what has driven that capital market. And that was actually, it's the capital market that sustains, back to your original submission, it owns the economy.
Right. So maybe on that note, Dr. Deo, maybe if we can give you like 60 seconds to respond to that, then we move on to our last very bit.
Well, that was a financial question. I would have very little to add, but to just simply highlight the simple fact that most countries that have managed to grow their firms and everything, they'll have that kind of venture capital and everything else, but development financial institutions also play a very big role. But we've seen in our case as Zambia, our Development Bank of Zambia closed up, maybe because of poor management or something like that. Because you see, when you've got a development financial institution, it gives you long-term investment. It will not come like a usual bank. 1 week after they've given you the loan, they come back to say, pay us back our lack of that kind of institution is playing really a rough impact. It has a negative impact on our economy. And then the state must be thinking seriously about how to engage the various players to generate resources and facilitate the establishment of the venture capitals, but also empowering the local people so that they can manage to participate in the economy effectively.
Okay. So this podcast really is supposed to explore exhaustively all these nice topics that we've touched on. So we have a lot to go on. We could certainly go on trade theory, really lay into it. What are we doing wrong? How has it evolved? Are we applying the correct one? Is it that we're just following whichever the victors of the economy, and they tell us, well, now we're doing mercantilism. That's what we're doing. Now it's HO, that's what we're doing. Now it's gravity, that's what we're doing. So there's a lot we can explore. The same thing for manufacturing, really lay into it. Where exactly are the bottlenecks? We spoke about solar panels you can get off of Radiant stores. Land is there. It's where is the bottleneck exactly? We can get into the stock market, which was my initial question, Mr. Madi. Hold you to that. It's why exactly are we dealing with only 30 years later? We can also talk again about state participation because, as much as both of you appear to certainly agree that we want to go private sector. I think you're still coming back and saying the real big dog, the one that can actually de-risk everything at this point, are somewhat the state, run institutions, or it's government in some form or the other. We certainly would look at research. We spoke about how there's information that's known. All we need is to put it in practice in some form. Is it that we're using the wrong research? We could also talk about exactly how we finance this, and it's a very nice case study. We have the land, we just need to put solar panels, and Mr. Mati has gone out of his way to make the point that these are things that are only going to grow in value. As PV tech increases, it can only get better. All you need is really land. Now, on that note, would like to give another component of this podcast is to actually speak to the young people, right? Both of you spoke about the skills and resources. So what we want is to actually guide them, push them in a particular direction, or at least point them to a particular direction. And this is in two areas. How should those that have actually got their skills use their time? Where should they focus? If somebody is an economist or if somebody is a financial analyst, what should they focus on? So unfortunately, I'm going to give each of you just basically 60 seconds each to answer one of those questions and another 60 seconds to answer the next one. So the first one is, where should the experts in your field, the young experts in your field, put their time? Then the second bit is, what should they study, right? And with that, you can even take, where should they study? Should they all try to get scholarships and study in Europe? Should they stay here? And where exactly here, and what should they study? So maybe I'll start with Dr. Dale and then end with Mr. Mati. And I think if you can actually take them consecutively, that would work. So what should they study? Where should they study? And what should they do after they study?
Okay, that's a very great question. And I can call it a biased question in the sense that it allows you to make quite good counseling to the young ones. Now, I've been in the field for quite a long while, and there are many niches of economics that is still like, people that can effectively contribute to policy.
Right.
There are times when I'm called up to provide policy guidance to countries that are outside Zambia,
Right.
West Africa, Southern Africa,
Right.
and so forth. If you look at areas of international trade and so forth,
Right.
they are quite interesting. But also, there are areas that I can say they are a tree and a fruit, in the sense that they are quite emerging fields. Issues to do with economics and climate change, issues to do with the environmental economics.
Right.
All these are emerging aspects of economy. And, you can get jobs almost everywhere in terms of government ministries, in terms of private sector. And also, there's a yawning gap in the global financial institutions, and like the World Bank and the IMF. And
Right.
I would encourage the young ones that, for example, have finished their first degrees, possibly to pursue their master's degrees and get into the young professionals networks, which
Right.
are easier ways of entering these institutions, not as a way of running away from Zambia, but as a way of going to get this exposure that is necessary for you to come and possibly work into Zambia. But
Right.
then where do you get these skills? Well, we've got a lot of universities that have been established in the country and also outside the country. So
Right.
your opportunities are open. I am I'm a traditional educationist in the sense that I like a program where a student is in contact with the lecturers. I'll be a little bit reluctant to go to online programs that do not put proper oversight on what you're doing. And of course, increasingly, I'm seeing in the UN systems, for example, them asking whether you got your degree by online or you got it by
Yes.
physical attendance.
Yeah.
That is very, very important.
Yeah.
So go to a good and reputable institution and do that kind of study that can lead you into a proper career path. But overall, looking at where the world is going, the fourth industrial revolution requires that you do a lot of science-based programs that, even if you do social sciences, combine those with some sort of like programming, combine those with some sort of like directions that can lead you to improving your productivity and outcomes. There are many of us, for example, in Zambia, who have done programs and degrees that have become almost, obsolete in the sense that we can't get jobs.
Right.
Up your skills, go into another dimension of, scholarly work, which can enable you to create a pathway that combines both the science part and the social science part. And that is what is lacking in most of our institutions, in the sense that companies would want to have a very good developer. But this developer must not just be one that is robotic in science, but can also play around with the social sciences so that it can interact with the real world people.
Right.
So think about those kinds of multidisciplinary approach so that you are flexible and be able to work in any institution that you want to. Definitely, I'll be biased if I say that you come to the University of Zambia. Definitely, it's one of the oldest institutions and they offer the best. You do come, but weigh your options as you look at that. Feel free to go out there, explore the world, and come back to contribute to Mother Zambia. Thank you.
Sure. Thank you so much.
Thanks, Dale. For me, what should you do? The observation I have is that jobs are very difficult these days. So you finish university, it's not so easy to find a job. But since you asked the question, what should you do? My suggestion would be try and get into an internship. Okay? Because an internship perhaps does not scare the entity that gives you the opportunity to work with them, because they see you not as a full-time, or a permanent employee, perhaps is what I wanted to say, but they see you as coming in, perhaps to be there for a short stint, say a year, and maybe even stretch it to a 2-year period.
Right.
But try and get into an internship graduation. To the extent you can get a job, obviously first prize, but to the extent you can't get a job, try and find sort of a halfway position. And that halfway position is what I'm calling an internship.
Right.
And the internship then allows you to see the lie of the land, so to say. At Stockbrokers Zambia, we've been running internship programming since 2000. Even at the stock exchange, we were doing internships. And some of our interns today are PhD holders. Some of them are running banks. Some of them are directors at the Bank of Zambia. Some of them are all over. So that would be really my suggestion, that once you've done your internship, it allows you to just get a sense of where can you then land. Because with an internship, it also gives you confidence now to apply for your next position, the job that you want to get, or whether it's a job or to go to further studies. Because when you apply as an intern, when you apply into a company or organization, you're always stronger when you're applying because you're already doing something. Okay. And your CV looks good. Okay. Because on your CV, you're able to say, I'm currently doing the following. As opposed to a CV that says, I graduated and you haven't done anything post-graduation. So an internship strengthens your CV significantly, but your internship also then allows you to climb the ladder and land where you actually want to land. And this is sort of the example that I've seen with some of the interns that we've had. What should you study? Study whatever you like.
Exactly.
If it's history, that's fine. If it's geography, that's fine. If it's mathematics, that's fine. I wouldn't be prescriptive. The key thing is study what you enjoy, what you have a passion for. Because at the end of the day, your first degree really is like what I always say, it's like a safety net. Okay. It allows you to say, I can think. I can engage. Okay, so I did my history, but I studied it very well. Okay, and I enjoy it. And therefore, we can talk about geography. That's fine because I'm able to piece things together, and make them understandable. So I would not be prescriptive. We've had some investment bankers come and engage with us from the US, from South Africa, from Kenya, from all over the world. And some of them, their background is they did architecture. Some of them did archaeology. But they're very good investment bankers. So I wouldn't be prescriptive. Where to study? Home as a starting point. Study home if as a starting point. And because you can always go abroad later and do your postgraduate. So that model seems to work extremely, extremely well. Because it also keeps you grounded. And it allows you to actually see the opportunities on the ground. Because if you go and do your undergrad, say outside, you may just miss the ability to actually appreciate the opportunities on the ground. So I always find that studying home, I think allows you to really be in a good position to see, there's an opportunity here, because it's like someone said to me, you swim with the sharks.
Right.
Yeah, so I would leave it there.
Sure. Kachingwe, 30 seconds. I also get like 20 seconds. Not a question, just your comments.
I actually had a question in mind because the insights both Dr. Mudenda and Mr. Mata brought out are so important, especially right now, because we need careers that are tied to modern development. And if we have been following this discourse, the points that our guests have raised are modern insights on what development entails. Because we've never taken time to interrogate development at this level. And so, how do we tie careers today and advance the development that we want for our country? And that's what has been discussed. So I wanted to ask a question, but
hopefully we'll get them
hooked. Out there listening, I would urge them to appreciate the input that our guests have laid out here to say we need policies that encourages an environment that will provide an education system that will appreciate modern development, and we move in tandem with the rest of the world. Thank you.
Perfect. So I'll probably fight Kachingwe later off camera about how he's saying we've actually addressed development. I think we need to come back and focus on the specifics and really dive into it. If we're going to spaz out for 3 hours talking about trade theory or the Lusaka Securities Exchange alone, I think we should do that. I'll probably need to fight Dr. Dale when he comes back, hopefully, on how he's talking about how young people should go and do YPPs with the World Bank. I'm actually saying, no, they should not. They should stay right here. I'll probably fight Mr. Martin about how, after this entire conversation has been revolving around, and Dr. Delto actually, it's been revolving around, let's build the entrepreneurial spirit. But both of you are actually coming back and say, yeah, you should get an internship or you should get this type of job. So I'll probably fight both of you on how we should actually get people out of university to risking it into enterprise. But otherwise, thank you so much, the both of you. I sincerely hope you can come back and we can discuss in more detail some of the really good points that you've raised. Thank you so much.
Thanks, Wiza.
Thank you, Wiza, and thank you, Kachingwe.
Right.
Thank you, Kachingwe.
Yeah.
Thank you so much.
Thank you very much.
Don't blame me with my excitement.
Nice
This engagement has been so exciting.
Sure. Thank